from the Cleveland Company will give us that overview.
Thank you. Appreciate you guys all waiting around for me. We'll start off with West Side office, because we don't really have much industrial. Defined as Beverly Hills, Brentwood, Century City, Culver City, Rio Reyes, Santa Monica, Venice, West Los Angeles, and the West New York. Total office square footage is about 48.5 million square feet. There's about 15.8% vacancy. I'll primarily focus here on creative office market. We have about 9.7 million square feet of creative office market with a 13% vacancy, which, I don't know, it's not really accurate because a lot of that is in some bulk properties over in the Playa Vista area, which we'll get to shortly. Actual square footage of creative office in the market is about 747,000 square feet, at about 8%, and drops even down to below 5% in the Santa Monica market. We had a negative net absorption of 299,000 square feet, primarily due to, again, the Playa Vista market. Under construction, we have about 1 million square feet that is being converted into creative office. Gross leasing activity over 2011 was 891,000 square feet. Gross sales activity, we had about 9 significant transactions, totaling $611 million. It roughly comes out to about $367 a square foot. Lease trend year over year was up 10 to 15% across the west side. Next slide, please. We saw a lot of capital chasing very few deals. Forcing their funds to look outside the West End market. There just aren't a whole lot of opportunities. Landlords and tenants, from a leasing perspective, landlords and tenants were on an even playing field. I think each party was walking away from lease transactions feeling pretty satisfied with what they received. Lease rates, again, increased 10 to 15% due to the limited supply of creative office. We did see sales prices surge and end up at what we've seen as previous record highs. A couple of examples over in the Santa Monica market, we had some more used products for north of $600 a square foot for creative office. There was an ample supply of traditional office, but again, very limited creative office. There's a stable demand, but no product. We did have a peekaboo look at a few multiple offer scenarios, causing asking for deal prices north of asking rates. Spec development was slow, but we did see signs of strengthening with multiple offers on properties. Next slide. Transactions of interest. This was a pretty interesting transaction. Google came in and leased a 3-building, or assembled a 3-building campus based on the conversations I've had with the landlord and as well as the brokers. You think it was top secret. I actually got more information when I Googled the transaction. So, based on what was happening in the market, what asking rates were on buildings, we were estimating that the rate was about $325 triple net, a 10-year deal, and they had a right to expand it into an adjacent 20,000 square feet. Next slide, please. This transaction was a Yahoo campus. Riot Games came in with 47,000 square feet, $350 full service gross, 4 months free. Landlord provided $35 in TIs for a 5-year term. They have since the beginning or the middle of last year expanded to 90,000 square feet, so that's not a bad decline to have. Next slide, please. This was a very interesting transaction, what we call a Vartanian portfolio. Rhinestone came in and acquired a 5-building portfolio totaling 163,000 square feet. Sale price was at about $89,543 a foot. Our understanding is that year one cap rate was about 4%. Next slide, please. All right, here we have what used to be a lot of the old guys when it was the City Corp campus. 199,000 square foot deal, sold for $32 million, $160 a square foot. Vantage property investors came in, acquired the property, going to be converted to creative office. Even 2% vacant, a roof in the building. The balance is, like I said, going to be converted to creative office. Next slide. Here is what most people know as the post office down in Playa Vista. A huge campus, 407,000 square feet, sold for $48 million to Shorenstein. There's a lender facilitated sale through Wells Fargo. And their plan is to also convert to creative office. Next slide. The forecast for 2012, we're going to see tremendous amount of capital continue to chase investments, which are in short supply. Demand will stay strong, stable to strong. Lease rates will probably have a slight increase, 5 to 10% max, but they remain flat. Landlords and tenants throughout the west side are still going to play nice, but we will see fewer lease concessions. Owner-user purchases, you may still have very attractive financing, and it will cause rates or sales prices to increase, and especially with the limited amount of product on the market. And then we're going to see a mixed use and high-end apartment development gaining momentum. There's a lot of movement in that arena. We understand there's MMS has gone through and acquired a property at roughly $390 a foot on land value for high-end luxury apartment development. Next slide. Finally, we will see the New York Giants overcome, or once again beat the Pats. Yeah, Pat Barnes, who's going to come back, get called by the NFL due to the short supply of quality quarterbacks, Collier String. And if you look really closely, Adam Deering, unless he gets fixed, will complete his circle of life and have some Irish twins.